All right, let's dive into a story that honestly sounds almost made up. We're talking about how a tiny loan, less than you'd pay for a pizza, sparked a global financial revolution and even won a Nobel Peace Prize. It all kicks off with one simple question. Just think about that for a second. What if the real key to fighting poverty wasn't just giving people a handout, but giving them a hand up with a simple financial tool built on trust? This one idea right here is the absolute heart of the story we're unpacking today. So to really get why a tiny loan was such a huge deal, you first got to understand the problem it was trying to solve. You see, for pretty much all of history, the global financial system had this massive blind spot. It basically made billions of people untouchable when it came to borrowing money. And this chart lays it out perfectly. Traditional banks, right, they need things like collateral, a steady paycheck, a credit history. But for the world's poorest people, those things are often just impossible to have. The system wasn't evil, not really. It was just totally inaccessible. It saw them as a huge risk and just slammed the door shut. Okay, so this is where our main character enters the picture, an economist named Yunus. Now, he was teaching these super complex economic theories in a university classroom, but right outside his window, a devastating famine in 1974 was forcing him to see a reality that his textbooks just couldn't explain. Yunus was a brilliant academic. He knew economics inside and out. But during that famine in '74, he had this big realization that all his fancy theories felt, well, totally useless when he was staring at real human suffering every single day. He saw people trapped in this horrible cycle. They were already poor, but to make things even worse, the only place they could get a loan was from these predatory moneylenders who charged insane interest rates. It was a trap that kept them permanently in debt. So this realization led Yunus to do something completely radical for an economist. He decided to forget the theories for a minute and run a small, personal experiment in a village nearby called Jobra. He made a bet, a $27 bet to be exact. That's it, $27. He found out that this tiny amount of money was the total sum needed to free a whole group of women who made bamboo stools from the grip of those moneylenders. $27 was literally the price of their freedom from a life of debt. And get this. He took that $27 straight out of his own pocket and lent it to 42 different women in that village. No contracts, no collateral, no credit reports. It was just a direct loan based on nothing more than his belief in them. And the result? It was mind-blowing. It defied every single rule of conventional banking. 100% repayment. Every single penny came back. And that small act proved something massive. Yunus's little experiment led to this incredibly powerful, world-changing idea. The poor aren't a bad risk. They are absolutely creditworthy. The problem was never the people. It was the system. Now, Yunus didn't just stop there. He didn't just pat himself on the back. He took that powerful insight and used it to build a whole new kind of bank from the ground up. He called it the Grameen Bank, which literally means village bank. And check this out. A whopping 97% of the bank's borrowers are women. Now, that was totally intentional. Yunus discovered that when you empower women financially, the money goes straight back to their families and communities. We're talking better health, better food, better education for their kids. The whole model was just genius. Instead of asking for collateral, it used peer support. Small groups of 5 people would basically vouch for each other. The weekly meetings kept everyone accountable and built a real community. And it wasn't just about money either. It was tied to social goals, like making sure your kids went to school. And if you want proof that it worked, the proof is in the numbers. The Grameen Bank has a repayment rate of around 98%. That's actually higher than most regular banks. It proved that a system built on trust could actually be more financially sound. So, as you can imagine, an idea this powerful didn't just stay in one village in Bangladesh. It set off a global ripple effect. But like any big idea that goes worldwide, it's also hit some bumps and faced some fair criticism along the way. Let's start with the good, because there's a lot of it. The achievements are just undeniable. Millions of people lifted out of poverty. The model has been copied all over the world. And in 2006, Yunus and the Grameen Bank were awarded the Nobel Peace Prize for creating economic development from the bottom up. Pretty amazing. But we've got to be honest here. As microfinance got more popular, some for-profit companies jumped in, and they started to look a lot like those old predatory lenders, charging super high interest rates and losing that social mission. This has led to really serious problems in some places, like people getting trapped in even more debt, exactly the opposite of what Yunus wanted. So, after all that, what's the big takeaway here? The crucial point is that the original idea is as powerful today as it ever was. It's proof that our financial systems aren't just set in stone. We can actually redesign them to be more inclusive, more empowering, and built on the radical idea of just trusting people. And I want to leave you with this final thought from Muhammad Yunus himself. Poverty is not created by the poor. It is created by the systems that deny them access to opportunities. That $27 loan is the ultimate proof that if you change the system, you really can change the world. Thanks so much for tuning in.